D.R. Barton, one stock you like over at Money Morning is Tesla. Stock's up, I think, about 20% so far this year. But give me your long-term view because this thing moves around a lot.
Yeah, the market believes in Elon Musk. Let's start there. I've got a couple of really close friends that work out in Silicon Valley, and you talk to people there, everybody loves Elon Musk. If you say, who would you like to work for? It's Elon Musk. So he's a visionary. So the market keeps confirming and affirming that. I think you're right. Tesla is a wild ride if you want it. Right now, I think intermediate term, it's sort of a hold because they have had that good run up you've talked about this year. But longer term, if they keep doing better on the production side, this is turning into a production game. Can they hit their numbers this year? 55,000 vehicles. They only got to 21.5 in the first half. They've got big plans in the second half. It'll be interesting to see how Elon Musk spins that. They've got the SUV, the X model coming out, doing a lot of good things. And I think long term, Gigabyte Factory, does that come online on time? And can they get that Model 3, the everyman car, up and going in 2017? If they hit those things, Greg, this thing is going to just keep appreciating.
All right. You also like Amazon, right? That stock's up 70% this year. They play an earnings game, if you will. It's pretty pricey when you talk about next year's earnings. Well, sometimes they have earnings, sometimes they don't. Tell me why you like the stock.
You've nailed it. Sometimes they have earnings, sometimes they don't. And the cool thing is that Bezos, again, people are affirming him. He can just turn that spigot on anytime he wants. They could have astronomical earnings anytime that they decide to not do as much growth. What they've done is grow their revenues over 100x since 1998 from 100 million back, 1 million back then. They're at $1 billion. They're going to be at 100 billion this year. So they've gone 1 billion to 100 billion. And they have a couple of aces up their sleeves as well. They broke out AWS, their cloud services 2 quarters ago, really went skyrocketing again in the second quarter. Everybody loved those numbers. It's a great business. They're the behemoth there. But they've got 2 things they haven't broken out and told us about. Number one, Prime membership. People are guessing 40 to 50 million Prime members, 100% more per customer if you're a Prime member. So those numbers are important. Secondly, Macy's is the top apparel seller in the U.S. Some analysts thinking they're going to, Amazon will eclipse them in 2017. Once they start breaking those numbers out, more jumps. I think this is one you got to have for the long term.
All right. Facebook's having a great year, up around 20% so far. Trades at, I think, 34 or 35 times next year's earnings. Is too pricey? It's not as pricey as Amazon, but that's pricey compared to the market.
It is pricey, but you mentioned up 20%. Let me give you 2 other 20%. 20% of everyone on the planet is on Facebook. 20% of all minutes that people spend on their mobile phone are spent on a Facebook property, whether it's Facebook Messenger or WhatsApp. So they have won the battle for eyeballs. What they've also done is shown us since the IPO, that's been several years ago, everyone said if they can monetize mobile, if they can hit these benchmarks, and Greg, they've been hitting them. So I think long term, again, they're going to continue to grow. They've got the eyeballs.
And then finally, let's talk about Shake Shack. They went public earlier this year at $21 a share. Now it trades around 70, but I think about 40% of those shares are sold short. So there's a lot of a squeeze going on right there. What do you do with this stock?
I avoid it. I think the short squeeze will get you whipped around if you've got a huge account with some margin. You want to play with that. That's probably a good game if you can sort of sell those rips. Long term, the whole fast casual, I use the term bubble very rarely. I don't think we're in a market bubble. Don't think we're in a tech bubble. Fast casual may well be in a bubble. You look at the Zoe's valuations, been as high as 1,000 times forward earnings. Habit, you've got Shake Shack that are all getting these monstrous valuations. Shake Shack with 2 to 3 times the value per store of Chipotle. So everybody's betting that they can find the next Chipotle. I'm betting they won't.
All right, well, thanks a lot for coming on and talking about it.
Thanks for having me, Greg.
And thank you for watching The Street.